Everybody. So I'm Erica Guattieri. I'm a CPA here in Providence. Just a little background. I just 2 years on my own, so I'm an entrepreneur as well. I was with a large CPA firm for 16 years that is here in Providence as well, and decided to spin off and do my own thing. So that's where I'm at now. As Molly mentioned, I am the treasurer at Festival Ballet Providence, where I've been with them for about 7 years now, and I'm the treasurer really just in 2020 at Waterfire. So that's sort of a new, kind of a new board that I'm on there. And then COVID hit. So it's like been very interesting to stay engaged in all that, but it's been great. So I can talk about, income tax stuff, business, sales tax, whatever you want to go over. I feel like, I actually teach a course at CCRI and I talk for 2 hours. So because the kids are kind of scared to ask and I don't even see their face. So this is great that I can actually see you. So thank you for that. I feel like I talk to my laptop for 2 hours with them. So I don't know if you want to maybe kick it off, maybe do a little intro so I know who you all are and kind of what you do. And then maybe we can jump right into some questions if that's helpful to kind of take it in the direction that you want, as opposed to me just telling you stuff that you may already know. So I guess how about we do that first.
I can call on y'all to remove that awkwardness, and I'm just going to go around clockwise on my screen. So Jim, you are first.
Hi.
Hi.
Oh gosh, sorry. I feel totally on the spot.
So just tell me your name and what you do.
Sure. I'm Jim. I do, well, for work, actually, I do a lot of marketing writing. This is the first year I've actually worked self-employed. I've always been an employee. So I am sort of, I don't know, trying to work my way through doing my own taxes.
Okay, so is 2020 your first year, not on a W-2 employee, or?
Correct.
Yep. Okay, great. Okay, awesome. Yes, you have your return will look a lot different this year.
I do have, oh, sorry.
Go for it.
I was just gonna say, I have earned non-taxed income in the past, so I'm a little bit familiar with SE, Form SE and that stuff, but.
Okay, cool.
Okay. Eduardo, you just turned your camera off. Are you good to go? You can go next. Say who you are, what you doing.
Hi, I'm Eduardo. I'm actually a college student. I'm in digital media design, and I'm not where everybody else here is at. I'm just trying to figure out when my turn comes, how to actually go about doing things.
Okay, awesome. Proactive. That's great.
David, you're up. Can you unmute, David? We'll skip David. If you want to put it in the chat, David, go ahead. I don't know what your technology situation is. MJ.
Hello.
Hi.
I'm MJ, and I'm a writer and illustrator and educator, facilitator of various things. So I have been making some of my income as a sole proprietor, and this year I'm kind of slowly shrinking the amount that I make as an employee, a part-time hourly employee at some workplaces, and shifting into trying to make more of my income through my freelance work. So I'm somewhat familiar and have been doing pretty complicated taxes for the past few years on my own, but every single time it comes up, I'm always like a bit of a wreck, and I feel like I always have more to learn, and like trying to figure out how to pace and organize myself throughout the year instead of like having a really stressful couple of weeks would be nice.
Okay.
Which I kind of already do, but yeah, always room to improve.
Mhm.
And Serena.
Hi, I'm Serena. I'm a visual artist and a painter. My most recent work is centered on the intersection of science, biology, and then art. And I feel like I've gotten a better handle on the income tax stuff over time, but like MJ said, like there's always room to improve and always room to learn. And I'm also really curious about sales tax stuff because that's something that nobody really talks about as much. Yeah.
Okay. Great.
So, and Erica, for the folks that are going to be watching at home later, we have a bunch of artists, craft and visual artists, who are moving a lot of their work because of COVID out of galleries and onto selling by themselves. So the galleries used to deal with sales tax. Now they're dealing with sales tax and the starting point is 0. The starting point is having never done it before. So there were a lot of sales tax questions a couple weeks ago, and I could not answer any of them except to tell the people that I could not answer them.
Okay. Okay, great. Okay, perfect. So, do you want to start with some like higher level sales tax stuff then? Okay. Yeah, so sales tax does get a little bit complicated. Obviously, if you start to cross over, every state has a different rate and has a different, a little bit of a different way as to how they tax. So I'll specifically just talk about Rhode Island. So Rhode Island sales tax is 7%, and that's on the sale amount. So it's not on, what you purchased for, or even how much it cost you to sort of make or build your product. It's actually 7% on the gross sale when you go to sell that. It is your responsibility to then, and obviously, so you sell your product for, the sales price plus the sales tax. So the person purchasing will pay you that full gross amount. Technically now that's not your money in a way. So that's the piece that I think a lot of people and clients that I see get held up with sales tax is it's easy to just kind of spend it because you're not having even though it would be good to have a separate bank account, it's such a pain. You're not gonna, but you need to know that usually, so sales tax is due on the 20th day of the following month. So for example, we're in November, your sales in November that you had received sales tax on would be due December 20th. So that's usually majority for everyone. If you have sales of less than, I think it's like $200, you'll be able to calculate, remit on a quarterly basis. But to be honest with you, I think in general, because it's money that you are going to have in your bank account, you may want to just do that on a monthly basis so you know that you're paid for. That's what I would suggest from a budgeting standpoint, even if it's not needed. So to submit the sales tax, it's really easy. So if you have an account, so let me back up. So you have to just register with the state as a business application. You can go right on and fill it out. I think it's like $50 to register with the state, and then you will get your sales tax permit, and it is annually renewed at like $10. And then from there, the state will you'll be able to log into the state's portal. You may have that already because you can submit and pay other taxes and actually get other permits and pay for other permits on that state website. I'm sure maybe some of you have seen it, but that's where you would also submit your monthly sales tax amount. And it's literally on just it's almost the honor system. So you go in and say, I had, $1,000 of sales and I'm paying you, I'm paying you this much in sales, and then they take it right out of your account. At the end of the year, you do end up submitting a sales tax reconciliation. So, if you haven't kept good records and those aren't, say, accurate numbers, that's where you could kind of get tripped up a little because you need that sales reconciliation to match what you've submitted all year. And you can go back and run a report and everything like that. So that's just the basic as to how it works to go and submit. So it's 7% on the 20th of the month following the sales, total gross sales. So on the gross amount of the sale, not your cost or anything like that, just what you're going to sell it for. And then you pay that on the 20th there. Now, I know in Rhode Island, there are some exemptions for artists based on some, I think what they call limited edition works of art. So things that are not produced in mass product, you know, so there's some exemptions for that you'd be able to not pay the sales tax on. And that's also a form that you need to kind of fill out to get like a sales tax exemption piece. So I believe, and if you haven't looked up, I believe that the list that they give you of certain works of art that are covered is a book or other writings, a play, a musical composition, a painting, print, photograph or other pictures, a sculpture, traditional and fine arts, and the creation of a film, the creation of a dance. So basically, more so for the art, you know, it's like if you're going to produce one painting and you're going to label it one with your name on it, that's kind of considered a limited work, which would fall under that sort of exemption amount. You know, the other piece too is I'm assuming all of you are local here to Rhode Island, but you know, if you're living in Mass and come into Rhode Island for an art show or anything like that, you do still have to register and submit sales tax as you know, if you were to sell products here that are sold. I believe that certain things that are consumable, so I think they consider soaps and a few other things, candles, right? They're not considered tax exempt. That's actually a taxable, even if it's like one candle, I don't know, you're not gonna make it again, I guess, right? So that's what falls under sort of that sales tax exemption piece. So Molly, do you have any other things that you think of that I know that RISCA kind of has this on their website as well, so.
Yeah, so I will also say that when you submit that form to the Department of Taxation, they approve it, but then they send it to RISCA to decide whether or not it is a original work of art that you're talking about.
Mm-hmm.
So we do include numbered editions of prints. I think the maximum number is like 200 or something, but like numbered prints count, but something mass produced that
Right.
like, what is the one that will do lots that you can buy online? Those don't count, right? It has to be a numbered signed print. Things like art books count, but a book that a publisher is going to do does not count.
Right.
And those things come through RISCA. So if you get denied and you think you got denied wrongly, you know where to find me. Although it's Randy's program, not mine, so he does it. But yeah, we do not include things that are, as Erica said, consumable. But like this mug counts. I bought this sales tax free because it's from a local artist. But a bar of soap does not.
Right.
Yeah.
So
and that's state sales tax only.
Right. Yep. Right. Exactly. This is sales tax, which is different than income tax. You know, so this is completely separate. You know, sales tax is state by state. Has nothing to do with federal income tax at all, or even your federal. Or even your state return when you file your state return, everything, that's a complete separate event. So this is just strictly sales tax. Yeah, so were there like specific questions about sales tax or anything specific that you wanted to go over?
I had some questions. I linked the form that's the artist exemption in the chat.
Yep.
And I was wondering if you fill out the form like once and then submit it, or if you like fill it out before you make a sale, or do you fill it out after? And do you collect the sales tax from the person and then like reimburse them, or do you just not collect the sales tax? Sort of the mechanics.
So I would say definitely fill this out before you start to, you know, do anything to make sure that, I assume it's up for approval at that point, right, Molly? So you fill it out and submit it. Right. I mean, my suggestion would be, you know, if you haven't gotten the okay that it's sales tax exempt to cover your butt, you may want to charge that amount and then have that conversation with whomever is purchasing from you to tell them that, you know, maybe that is money you'll hold aside for them. Because now the problem, I don't know, you know, how you would go back to the purchaser or the consumer there and say, oh, I didn't charge you that extra $7 because now so now you're on the hook to pay it out of because either way, whether you collect it from the purchaser or not, you still are going to owe it if it comes down to it, so that's another piece. So I don't know, Molly, if you have any other thoughts on that, but that would be my thought.
Yeah, you want to submit this ahead of time before you're trying to sell anything. And you just have to sort of resubmit a final document once a year. So this will cover you for a full year. You don't have to do it every time you're going to a show or something like that. So your description of artistic works wouldn't be the exact specific each piece. It would be your work in general, more in general. And you are still, everything else Erica said is totally correct about still being on the hook if you've not gotten the approval. RISCA is quick. Taxation is like a big question mark for us, right? That we never know how long they're going to take.
Mm-hmm.
And then you have to submit a year-end report about all of the stuff that you sold that folks, you still have to keep track of all of that and submit a year-end report to the Department of Taxation. You can't just like sell stuff and not track that because we need to know the financial impact.
Is it being submitted for approval to RISCA or the Department of Taxation or both, and which one comes first?
Both. You submit it to taxation. If you didn't know it went to RISCA, you wouldn't know. Taxation, so you know what I mean? Like all of your communication about this form will be with taxation. Mm-hmm. Once they give the first pass, they'll send it to Randy for a quick yes or no, like, is this art or not? And that's it. So it goes to taxation. If you don't know RISCA is involved, you wouldn't know. You won't interact with us at all about this.
Okay, so we send it
unless you need help.
People first, then they send it to you guys.
Yeah. Yeah, you shouldn't need to communicate with RISCA about this, but sometimes you do.
Okay. I'm taking notes.
And could you walk us through, like, let's say a visual artist who sells paintings and ceramics, like, mm-hmm. What would they fill in on a form?
Yeah,
like
just
this? Would they, if they only have to do it once a year, would they just write like number 1 paintings, number 2 ceramics, or?
I would get a little more specific if you have like a type. If you're like an abstract painter, I would put abstract paintings, or landscape paintings. I would be like a little more specific than paintings, but you don't need to put, a list of every single thing.
Okay.
If the artistic exemption form covers you for the whole year, does it matter what time of year you initially fill it out?
You have to get approval before you can use the exemption.
So ideally submit it before you have any sales happening.
Yeah. And I think you just need to you don't need to resubmit, I think, but I'm not sure. I don't think you need to resubmit the whole form every year. I think you just have to do the certification.
Exemption.
I'm seeing if Randy can hop on, because I know he's working even though it's a day off, because he's texting me a bunch of questions about the Hart grants from Commerce. Because it's that kind of day at RISCA. It's that kind of day off at RISCA.
Okay. I'm also wondering about, like, what's the line between what gets sales tax, whether it's exempt or not, and what doesn't, like services, or if an organization, if you're submitting a W-9 for some contracted work, is that kind of outside of this type of thing.
Right. So sales tax is more on like a tangible product, you know, something that you're actually selling. So right now, services. So like if you're going in and just doing some sort of, you know, speech or, you know, talking about, like you said, you did some education, you know, if that wouldn't be, they would issue the 1099, you pick that up on your personal, but there's no sales tax on you or, you know, going in and saying, doing, you know, an educational seminar or something like that. Think of it more of like a tangible, you know, something you can touch that you're gonna pay the sales tax on.
And so probably things that are digitally submitted. I mean, I do a lot of like digitally commissioned works, and those I do them sometimes hard copy, but I'm not actually selling the originals. I'm selling the image. I'm selling the digital image.
Mm-hmm.
So that I haven't ever done sales tax for that kind of thing. Is that okay?
Yeah, I feel like the digital is a fine line as to sort of what is considered taxable and what is considered not taxable, depending on what it is. So that's probably a little bit more like research to go over what, you know, what's taxable and what is not taxable. Because I know I'm thinking that at one point, like if you're a photographer, like for weddings, like sometimes the digital, you know, but if they actually purchase a photo album, so you can touch the album, you know, and then that becomes a taxable. So that's why it gets so specific sometimes with the digital piece as to really what industry you're in actually. So.
Hey, Randy. My very important and formal boss has joined from the Swiss Alps where he's on vacation. The Swiss Alps of Pawtucket. You're on mute, Randy.
Okay, there we go. Yeah, it's right on the Pawtucket-Attleboro line.
You're from Pawtucket. I've never seen those. That look.
They're beautiful. Over by the
I'll have to look really close.
Randy, will you give us just a quick overview on the process of submitting the sales tax exemption form and when you should do that and how long it lasts?
Sure. Okay. The sales tax exemption, and I can go deep or shallow in this. The sales tax exemption for the works of art is designed to be an exemption for the sales tax that you're normally supposed to pay. So in order to take advantage of the sales tax exemption, you first and foremost have to have a sales permit from the state of Rhode Island. So if you don't have a sales permit, you can't apply for a sales tax exemption. You also have to understand that if you have a sales permit, which you are required to do if you're selling anything in the state of Rhode Island, you have to report quarterly on your sales, even if the tax that you're collecting for that quarter is zero, you still have to report. And once a year in January, you have to do a summary of your sales for the previous year. That's called a reconciliation form. Okay, that said, you have your sales permit. You can fill out a maddeningly crafted PDF form that's on the Division of Taxation's website that you can't actually type in. You have to print it out, write in it with a pen, scan it, or mail it to the Division of Taxation. They then send me a copy so that we can basically sign off on the fact that you are in fact creating art that's exempt from state sales tax. They don't want to make artistic determinations in the Division of Taxation for some unknown reason. And then we sign off on it, we send it back to them, they then issue you a sales tax exemption. I can go into more detail or respond to questions about that. I can also talk about what kinds of art is exempt under the law. So go ahead, Serena.
I got lost of the form you were just talking about. Is it the sales tax exemption form or is it the end of year reconciliation?
No, it's the sales tax exemption form.
Okay.
And do you all have access to it, or should I put a copy of the link in the chats?
It's in the chat.
Okay, awesome.
We put
It's
it,
in-
Serena put it in the chat before you got here.
Okay, great. So what else can I answer?
Will you talk about editions of prints?
Oh, sure. This is fun. Okay, so the exemption is for original, one-of-a-kind works of art or limited edition works of art. So in order for it to be a limited edition, it needs to be created under the direct supervision of the artist or creative actor here. And it needs to be, and in some cases this is difficult, in some cases it's not that difficult, it needs to be enumerated as X of Y. So usually if you run silkscreen prints, it's 3 of 50 or 5 of 200. The exemption isn't for things that are mass produced. So you can't create something, then send it to a sweatshop in China that creates 10,000 of them and sends them back. The exemption doesn't exist for that. But giclée prints or photographs or other kinds of things, they should be numbered and signed by the artist. It gets to be a little bit strange when we're talking about craft items like jewelry or fabric art like scarves and stuff like that, or pottery. Although pottery is probably a little bit easier to do. So it's like a good faith effort. You know, I've had conversations with artists where I said, if it's jewelry and you just put it in a box that the artist can sign and number, that's fine. But it's not something that the taxation police are going to jump all over you about. We hope. I mean, I can't speak for them, but yeah, that's the intention there. Does that make sense? Does that create a whole bunch of other questions?
So Randy, I know before you came on, someone had asked, is this the exemption a one-time filing? So once you receive that?
Yes, the cool thing is, while you have to renew your sales permit every year for a whopping $10, the sales tax exemption is a one-time form, and as long as you have your sales permit, it is in force. So you don't have to renew it ever. And I understand that they're starting to go after people who don't file their annual reconciliations. So I would stay on top of that as well. And we'll send out reminders on that in January.
And that also reconciliation can be, I sent the link that will get you to sort of where you would log in if you have an account at the Division of Tax, as well as how to initially set up an account. And that sales tax reconciliation can be done right on that portal within there as well. So
Yeah.
pretty easy.
And I've created a glossary for it that has descriptions of what taxation is actually looking for on line 1B, stuff like that. Yeah, it's a mysterious and wondrous process that taxation uses, and I can't begin to understand it fully, but that's the way it is. Serena, did you have a question?
I do. Just to make sure I'm understanding it right. So the exemption form means you're not collecting the tax, as opposed to my question was just, oh, do you collect it and then like reimburse the customers?
No, it means that you're not collecting the tax. You have an exemption from collecting it.
But you still file quarterly and you say, oh, I've collected zero tax.
Yeah, exactly. So I haven't seen the form lately. I don't know whether you're required to list your sales for the previous quarter or not. But if you do, then you put, I sold $250 worth of stuff and I collected zero tax.
Right.
Yeah.
And they will actually come up with their own interest and penalties if you don't file that zero tax. It's interesting. So, and then once you submit it, then they reverse everything. So that is something, maybe just get in the habit of every 20th of the month kind of going in and just, putting something in there that you did.
Yeah.
So they have something on file.
Yeah, the law says basically that you're required to submit those quarterly or regular reports. It's usually quarterly unless you're doing a lot of business, and then it could be monthly. And even if you've done absolutely no activity in that quarter, you're still required to file a form. And if you don't, you're in penalty of like losing your sales permit. Does everyone understand the distinction between selling in-state and selling either via the internet or out of state or that sort of thing?
I was just going to ask about that.
Okay, so according to the current rules, and I always put the proviso that I do not work for the Division of Taxation. Under the current rules, if you sell work that is over the internet or to someone who lives in another state and is not physically purchasing it from you here in the state of Rhode Island, then you're not required to collect sales tax on those sales. That may change, you know, if Amazon goes south. But interstate sales are not taxable. If, however, somebody in Connecticut orders a piece from you here in Rhode Island, then drives across the border to your studio and picks it up there, then that is not an interstate sale anymore. It's an intrastate sale. You've sold it in the state of Rhode Island and you're required to collect sales tax, although under these circumstances, you're not required to collect sales tax.
I read that if you had either an economic nexus or I forget the other kind of nexus in the other state, then you do. But in order to have that nexus, you would have to be making like $200,000 or, you know, some crazy amount of sales in that state every year.
Yeah, I've actually never heard that.
This is I think that's a question for Erica.
Yeah, and that might come down to more an income tax filing requirement is a lot of time with the nexuses, you know, how much sales have you had in the state? And then if you have to allocate a portion of your sales to that state so that they then will get the tax on that. So essentially, if you have a Schedule C, so for example, if you do a lot of work in Massachusetts and a lot of your 1099s are coming from these Massachusetts-based company and you're working in Massachusetts, and then you're also doing some in Rhode Island, sometimes you will have two Schedule Cs because one will be allocated to Massachusetts and one will be allocated to Rhode Island. That's like
Right.
kind of basic, you know,
Right.
right. But
You know,
if it's on a sales, you know, if it's like $1,000 or something small, I don't have my clients do it. But if it gets to be larger dollar values, you know, you may want to do that. Because keep in mind, the IRS, the government, like the states don't have your expenses. So they're just going to look at your gross. So maybe
Right.
you lost and you don't have to pay tax in Mass, but they're going to add up all your 1099s and come up with their own tax. So
The other thing to keep in mind, in case there's anyone here who for some unknown reason lives in the state of Massachusetts, and you can live in the state of Massachusetts and have a sales permit in the state of Rhode Island. But in order to take advantage of the sales tax exemption, you have to be either domiciled in Rhode Island or have your principal place of business in the state of Rhode Island in order to qualify for the exemption. There's also a provision that allows for people who participate in fairs or festivals here in Rhode Island to take advantage of the sales tax exemption under a blanket exemption that's owned by the fair or festival. So you could be next to a Virginia artist in a fair or festival here in Rhode Island, and they can get the same sales tax exemption if they're covered under the fair or festival's blanket exemption. Cool. That was fun.
Oh, I have another question.
Oh, go ahead.
So if you do,
I'm just waiting for the polls to close, so you know I'm fine.
oh gosh, if you do freelance, like somebody says, "Oh, can you make me a painting that's these characteristics?" You write, so it's a commission. Do you pay
Yeah.
sales tax on that?
That's a really interesting question.
Because we started talking about the 1099, so I was thinking about that. Yeah.
I'm gonna say that if you create a work of art for somebody, even if it's on commission, that you still can take advantage of the sales tax exemption. There is a provision in the law that says it does not adhere to commercial activities. And what we've defined that as, if you are a photographer and you're doing wedding photographs, then the wedding photographs do not fall under the exemption. But if you're doing fine art photography, then those fine art photographs are exempt under the provisions. So one could argue that if you're working on commission for somebody, you're creating whatever it is you create, and somebody has asked you to do that, then it's a commercial endeavor. But I've always said, no, it's a creative activity on the part of the artist and is therefore exempt. We run into the same thing with furniture makers.
I think there could
go ahead.
also be a question there, Randy, about whether or not that's something where you would have to pay sales tax at all, or if that's a services provided, the commissioning, which I would defer to an accountant on.
Yeah, and the state is probably going to be looking at, and has been trying for the past 3 or 4 years, to extend sales tax into services like design, interior design, and that kind of thing. So that, that's a potential danger area.
I have a question about filing in multiple states. I will often have clients that I'm doing illustration commissions for in other states, and they're usually kind of a W-9, 1099 situation. What is there a certain percentage of Schedule C income that I should keep in mind, or a dollar amount in terms of whether I should file multiple Schedule Cs? Because in the past I've actually done a bunch of them, and I'm wondering if I could stop doing that.
I'm gonna jump off unless somebody has anything more on sales tax. Okay, have a lovely evening.
Thank you, Randy.
May all your wishes come true by the end of the night. Or the end of the week. Bye.
Thank you.
Okay, yeah, I'll take that question. So every state is different with their nexus requirements. They're usually pretty much larger. I tend to use, I'm just say, for me, if I have clients filing, once you kind of get over into the maybe 5,000, 10,000, 10, over maybe that $1,000 threshold in other states to start to break out the Schedule Cs. But if it's small, it's hundreds of dollars here and there, or anything like that, that's kind of what I don't really break it out, because usually once you take into effect the standard deduction that you get and the exemptions, the normal deductions you get, so it's hard to say because every state's a little bit different. But usually I look at which states, what their exemptions are from an individual tax standpoint, and then look at it from there. Or if you're already, sometimes if you're registered with the state, sometimes I feel like they're looking for a return. So as opposed to them coming, if you're like, well, I've already registered to do sales with them, then I'd say, okay, let's, break it out and file it with that state. So
what would the
dollars here and there, you don't want to file in 10 states. That's crazy,
Right. So often I'll have a big project in publishing out of New York, and what would I research to sort of make the determination of what the particular rules of that state are, or any other state should I do business elsewhere in the future, to sort of make a call on what at what level? But this is very helpful to know that for small bean stuff.
Right. Yeah. So for example, I just because I don't know New York off the top of my head. So just quickly Googled New York Nexus, and it was my business, I have a business with no physical presence in New York. So they're basically saying the amount of gross receipts from sales of tangible property delivered into the state that exceed 500,000, or if you've made more than 100 sales transactions within that state. You know what I mean? So
that's big. So I will not be doing that.
Yeah. I don't think, you know, a lot of times it's quite necessary until you're getting into some of the bigger, you know.
Right. As an individual
Right.
business, it may be with a few commissions, it probably doesn't.
Right. So actually now with that said though, with this whole work from home from COVID, they may be coming out with the states actually, because now with that said, I feel like I should have said in the beginning, everything I say today could change based on what happens today. But definitely I know that the states are really starting to look into this sort of work from home. Where are you working? Some states are now going to want to try to grab you, even if you know you're out working somewhere and not working in the state. So there are definitely changes coming down the pipeline on that piece as well. So that's also something to consider for, you know, for the 2020 filing year when we come into next year. Any other questions?
Can we talk about, are there city-specific taxes, particularly around sales tax? And if so, how do you figure out which city to pay taxes in?
So the city is where you're like physically located. If you have, you know, if that's where I guess your studio is. So if you're located in Providence, that would be in Providence. You know, if you start to open up or go into different locations or open up maybe a different gallery in another city or town, then you have to register with each one, you know, so that they would then know that you're there and you're allowed to do sales within that city as well. So is that the question there? Or?
I think so. We have a lot of folks who live in one city but are doing sales of a variety of kinds in more than one city within Rhode Island. So we have one jewelry maker who wasn't able to come tonight that lives in Lincoln but is like doing a pop-up shop in Providence. What do you do? So her studio where she's making the work is in Lincoln and her business address is in Lincoln, but she's selling in a variety of cities around the state. Okay. Sometimes at other markets where they're collecting the sales tax, but sometimes on her own.
Okay, so the sales tax is just statewide, right? Doesn't matter what city or town you're in. And you're talking more about the tangible personal property tax, I think, where once you register with their city or town, they actually mail you a form. It should be coming out pretty soon, where you do list if you have inventory, if you own property, if you even furniture and equipment, basically your assets, things that you own. The city or town wants to have, they bill you. So you pay it just like you pay your car tax on like a quarterly basis. I'm assuming that's what you're talking about. Yeah. So it's where you're physically located. So it doesn't matter where the sales are happening. It's like your studio, your gallery, even if it's your apartment that you're working out of, would be like where you physically are at that, you know. And then once you start to, I don't know, so for example, you open up a storefront in Providence, so you're going to pay Providence tangible, you know, personal property tax there. But then now you move into Lincoln, you have a Providence in Lincoln, so now you're having Providence in Lincoln, and you're looking at each, say, storefront and that in that city or town, and that's what you're going to list on that property tax form that you're going to get. I may even have, is that your question, Molly?
Yeah, that totally answers the question.
I actually think I can quickly, oh yeah, okay. So I'll just show you sort of, kind of with my finger just crossed out, but so for example, like this is a form, it literally says, like, I don't even know if you can like see, but I kind of put my client's name, but it's like annual tax return. This was for Pawtucket tax assessor. And then you would then go in and ask you to fill out what you own. This is all blank, so there's no client information on this at the time, but like literally is asking you for like, do you have computer equipment and what year you bought it? And then it goes down. So this is specific, like I said, these forms come from wherever you're registered. So you get one, you know, and look like this. So you'll see that come in the mail, but it's where you're physically located. And those are due to be filed by the end of January. I think you can get extension till March 15th on those as well. So like I
What
said,
that's called? What was that called again?
that's a tangible tax. So let me see what they say on the top. They call it an annual tax return, but that's for the tangible. It's a tangible tax that you would pay. So it's tax on the property you own, basically, or not, but like what you physically, like your equipment that you have. Sometimes certain, if you're selling inventory, you know, so if you make if you make things that you're selling. If you own real estate, I'm going to see the different sections are computer, tangible property, which is literally just furniture, fixtures, equipment, signs, if you own vehicles, anything like that. So it's a tangible personal property tax, separate from sales, separate from income. So.
And is that city-based tangible tax on business stuff, or is it on personal property as well?
Oh no, this is just business. So this is what you own for your business, even though it says tangible. I don't know. They call it tangible personal property, so to confuse people even more, but it's actually not personal property that you own. It would be strictly for your related to your business. Mm-hmm.
So you would have to be registered as a business in the city.
Yeah, right. Exactly. They actually send that form out. Mm-hmm. They'll send it to you, so they know all your information.
Jim says, it sounds like that tangible tax is just if you have a studio or a storefront and not if you just sell something in another city.
Oh yeah, it has nothing to do with sales or anything like that. Mm-hmm.
So it seems like what you're saying is that folks need to be worried about 3 different main tax worlds, which is the income tax, sales tax, and then the tangible tax. So tangible tax would be where your business is registered, like where you're located. Right. Not all of the places you're doing business. Sales tax would be the places you're selling stuff, if you are selling stuff, and it has to be stuff. And then income tax is about where you do the work. Yes?
Right. So yes, so income tax is is obviously your federal taxes that you owe, and then your state taxes. If you worked outside of any state that you reside in, you would have that. Then you have your sales tax, which is just a state level tax, again, on a tangible product that you can touch, something, hopefully not on services just yet. And then you have the tangible property tax, which is on business equipment, things that you own if you're registered with the city or town. So it might not necessarily be, if your office is out of your home and you have a bunch of equipment, they may mail you that form that you'd have to list, and you'd have a small amount of, tangible tax for that. Or they may not mail you anything. So,
What happens if you have one computer and you use it for both your personal and your business stuff?
There's a little bit of a threshold there to say, come on, it's not, I wouldn't worry about, that. I would say I would almost just judge it, if you're starting to really have like a really big studio and you're, really filling it with different types of equipment, they're probably going to come in and want to impose a small amount of tax. But if it's a laptop and some paper and all that, no, wouldn't even worry about it.
So if you're a ceramicist and you have a studio where you have your own kiln, you probably need to worry about this. If you're have a studio in your half of your bedroom and you're a painter with just paints and stuff, you probably don't need to be filing tangible tax.
Right.
But always consult a local tax person about your specifics, because I can't legally give you tax advice.
Right. And and like what I'm saying is, it does vary from person to person and from business and what you're selling, so this is more of like a higher level, advice. But yeah, definitely, if you need more guidance, it's helpful to get more specific with certain things.
Is the tangible personal property thing, is that a city tax or is that also a state tax?
Yep, so that's remitted to the city or town. And basically what you do is that form I was showing you, that annual tax assessor's form, all that form is doing is telling them certain, dollar values of what you own. Then they go in their system, put it in, they have a little deductions and different things, and then they will literally mail you a coupons, just like for, I guess, the car, just for your car tax. If you don't pay it online, you get those 4 little pieces that you rip off. The town, city or town will mail you that and say and that ends up being due on a quarterly basis. And it's an amount that they come up with. And every city and town has different tax rates on that too.
So do you actively,
Higher.
oh, sorry.
Providence being just more of a higher tax level. I wouldn't, Serena, you're just in your house, like doing some.
Yeah, that's the other half of my room is my studio. There's a tape line on the floor.
Yeah, I wouldn't worry about the tangible tax piece.
Yeah. Is it a thing that like they tell you need to pay, or do you actively like go to them?
No,
Like
so
you were saying, they
like
mail
I
it
said,
to
they'll
you.
send you like that. They'll send you like a form that has all these pages. You fill it out to the best of your knowledge and mail it back. It doesn't calculate any tax, and then they put it in the system, and then they will send you, the form that says, okay, we valued all of your property at $50,000. Our rate in the city is whatever, X, Y, Z. And now here's what you owe, and then break it down on like a quarterly basis. So.
Okay, how y'all feeling about tangible?
I mean, if I have to guess, I don't think it's probably relevant for most of you. So it is, definitely if you have a storefront or you start selling, for sure they'll look. And the thing is, if the day comes where you are in something separate, you do want to fill that form out, because they will actually take it upon themselves to assume what you own and come up with their own tax. So, I've seen that happen before as well. So if that happens down the line, I would definitely make sure you get that form filled out and submitted.
All right. How are we feeling about, we're good on tangible tax. Are y'all tapped out on sales tax questions, or you have more of those?
I have one that's linked to sales tax that's pretty quick. So you have to fill out the business and application and registration form, which there's the online portal for, but there's also like a PDF that they show online, which I just stuck in the chat. I was wondering which category like artists would go into. They list the categories on page 3, and none of them fit art at all, in my opinion.
Okay, so you're looking at
I haven't tried the online form. Like, I don't know if it's identical to this or if it's like updated at all.
are you looking at the section that says business code for principal business activity?
Yeah.
Oh, okay. Yeah. So I believe with these, let me see. There may even be sometimes a code that just says like other, but and actually I need to take a step back. If you look above, if you see where it says sales tax and litter permits must be, and then there's also codes for your cities and towns probably to put on there. So that's where they may be, we'll get some of the information.
I stuck my top 3 in the chat, but none of them still feel right at all for any visual art.
Yeah,
Right.
they're not.
You can put like unable to classify. I mean, that can be a thing too if it's not on here. You don't, So.
Yeah.
I'd have to like run down this whole list to see, but because you're not a retail store, you're not really merchandise. Yeah, I mean, it could just be other. Yeah, I mean, I would think that you could put it on unable to classify. A lot of it's more for internal tracking for them to just see what types of businesses are registering. So what are you seeing, Eduardo? Other personal 6, 8?
I would say other personal services would be things like maybe teaching artist work or something where it's a service. Interior design would go there, but I don't think like I don't think a art piece of art
Right.
would go there because it's not a service.
Sometimes you can Google it. I'll look and see if I can find it while we're chatting.
I love Googling things
Sometimes.
and YouTube knitting videos.
But that is the right form, and that would be the form that you would fill out. And you know, they're going to have all your information on here. Obviously, they're going to have the city or town that you're in. You know, so that could trigger some other things there.
And this form is different from the yearly sales tax permit?
Yes.
Or, okay, so this is
just literally strictly business registration. So it's just to register your business with the state.
It's to get the sales tax permit that you have to fill out that form.
Yeah.
But you can also fill it out online, like through a portal.
Mm-hmm.
And as a sole proprietor, but not an LLC, does it make sense to do this?
Oh yeah, you can be so if you're a sole proprietor, you know, you're still so if you're not a single member LLC, so you can still register with the state, you know, I would still.
Right. So even though you're not a business you're running a business as yourself, it still is a business, so you can do this thing. Got it.
Any other questions on the business tax or that business form?
When they say sole owner, do they just mean sole proprietor? That's on the first page. It says like,
Yes. Yep. And then, you know, that LLC sole proprietor is if you've got a tax ID with the IRS, and then now you're registered as a single member LLC with Rhode Island. So you're still filing that Schedule C, but you have to file that form. You have to annually file a form to submit your $400 every year to Rhode Island. More of informational, they really just want the money. You're then considered a single member LLC sole proprietor, as opposed to, you know, some people do operate a Schedule C and they never get a federal tax ID number. So usually they do, because a lot of banks, if you have, you know, you suggest, obviously, as I'm sure you all know, you want a separate bank account, all that stuff, then you need to have those tax IDs. So that would kick you in. And, you know, I'd suggest at that point to register with the state to become that single member LLC. And that's what the difference between those two would be.
All right, I know that if y'all kind of have rounded the corner on sales tax, I know particularly Jim has some income tax questions moving from an employee W-2 world, which is so easy, to not that. And Jim, you were saying you had some questions about how to file your quarterly taxes, etc. So take it away.
Yeah, I mean, I think I'm okay with federal taxes. I basically took a paycheck from last year and figured out what my percentage was, and so I just pay that every month through the whatever the federal electronic filing system. What I'm really not sure about is Rhode Island taxes, though. I have not figured out how to do that.
Mm-hmm.
And of course, now it's like November, and I'm going to be really hurting in April because of that. But
so Rhode Island has, the top bracket is 5.99%, and then the one, excuse me, the bracket below is 4.75, and then I think the one below that is around like 3%. So, I always like to say, say maybe like 5% of what you think your net earnings would be. Rhode Island, even though federal has gotten away with certain exemptions, Rhode Island still has, applies certain exemptions that the federal doesn't. So, I say for a rough estimate, if you do an estimated payments, to assume 5% on your net income into Rhode Island. And then if you're paying your quarterly estimates, because you're not paying that self-employment tax, because that tax is at the federal level. The Rhode Island, you're just paying normal income tax like you paid when you had W-2 wages. So there's not that sort of additional tax there.
okay, and so like at the most basic level, though, where do I pay those taxes?
Okay. So
the 3% and 5% was helpful. I didn't realize it was net income, but I just I'm not registered as a business. So
Nope. So that's paid under your personal. So that would be paid under your social security number. There are vouchers that you can mail a payment in on a quarterly basis to Rhode Island, just like you would do at the federal level. I think they've opened it up now where you may be able to make some estimates online, but Rhode Island is slightly behind on their technology. So maybe not, but there's just quarterly vouchers that you would have. So there's 4 quarters in the year that you would make payments: April, June, September, and January. They follow the same exact timeline as your federal, and you would just mail those payments in just like you would to Fed, but it would go to the Division of Taxation, and it's under has nothing to do with your business. It literally is your personal income. So it would be your 1040 with your social security number on that. And their 1040 ESs, Rhode Island 1040 ESs, the little estimated vouchers. So you could be able to, I probably could probably get them up. So that's exactly how you would do it with the federal, even though I believe federal, you can pay them online. So. What other?
Yeah, that looks right to me, Jim.
Did you send? Oh, sorry. Oh, yeah. Yep, absolutely. Yep. So this is the form. So there you go. So see, there's your tax bracket. So you'll see it kind of on that first page. They give you 0 to 65 is a 3.75, and so on, gets you to 7.45 and 5, almost 6%. So.
And hopefully you all are in the highest tax bracket. That's my dream. That's my dream for everyone.
So then when you're filling this out, so I'm married filing jointly, but my wife is regularly employed. So would I just not count her income or any of that doing this? Or?
Yeah, so that's a good question. So when you have someone else in the household that you're filing with, so a joint return where there's withholdings, so it's hard to say, because obviously we all hope that you're running your business and you come out with income, but maybe for this year, it's COVID year, and you happen to have a loss, you wouldn't even have to really pay any estimates, because that's going to actually offset her income, any other W-2 income you have, and now you may get a refund because you've actually been paying in through your W-2, because your W-2 obviously, is net. So you have your federal taxes and your Rhode Island taxes taken out as your withholdings. So that's more if you had a loss. If you have income, again, it's hard to say, because depending on the bracket you have and how much in Rhode Island, maybe your maybe your spouse is holding at a higher level in Rhode Island, and then your income attached to it the withholding is covering everybody. So you can do it you can do it where you strip it to be just yours and you pay those payments in, then you get a refund. I mean, that might be the better option, just to think as if you're just like single, and this is the only income you're going to have. And then this way, when you go to file, you're covered for any underestimated penalties, but now you're going to get a refund back because you paid in too much throughout the year, as opposed to getting a bill and having to pay in. So it's really what my advice is varies client to client, because I have some clients that they're like, I don't care. I don't want to give the government a penny before they are owed that money. And there's other clients, they're like, no, I can't, I don't want a big tax bill at the end of the year. So I want to make sure I'm paying throughout the year. So, it kind of depends. But if you have, if you're like that and you don't want a big surprise, I would say just kind of do calculation based on just your income. And then if it happens to be that with its estimates and with some withholdings, you're overpaid, then you get a refund. So.
If you accidentally underpay on your quarterly estimated taxes, what's the penalty?
So the penalty is pretty hefty if you happen to underpay. There's 18% and there's a 25, there's interest and there's a penalty. So you have like a 18% and a 25% capped at 25%. So the penalties can get pretty hefty. There are different rules where if you've paid in enough throughout the year and you still owe, that you would be sort of like not affected by that interest payments. But they can be, the penalties can vary based on how much you owe. So you'd have to do a whole calculation on it, but definitely. And there's also, there is a one-time waiver that if you're working with an accountant, that you can write a letter to the state, and even the IRS is doing it now, where you can say, you know what, this is the first time I've had to do this. I've always been timely with my taxes. They will never waive interest, but the penalty, which is a higher amount, they will give you like a first-time abatement. So there is some options if you're, kind of first on your own and you have all these taxes and you want to take advantage of a first-time abatement of penalties. And that doesn't mean the first time ever you file. Like you could be filing for 5 years and then all of a sudden you've had this year, you've run into some issues, and now you have these late payment penalties and interest associated with it, and you want to take advantage of it. That could be potentially an option there. I've seen the state work with people on that, especially if you make an effort to pay them the interest they want, and then ask them to waive the penalty. They've worked on that. But it's a one time, and you kind of just say, oh, I'm a good filer, I just make an attempt to pay all the time. So. Yes, there's a safe harbor. That's what you were asking. Safe harbor is considered, so this is where you would not be hit with late interest payment penalties. For the federal level, it is 110% of the prior year tax or 90% of the current year tax that you have to have paid in. So there's two things. In Rhode Island, just basically 100% of the prior year. So you'd have to have that paid in throughout the year.
What are some of the common business expenses that you see sole proprietors forgetting to deduct, particularly in the arts?
So some of them are actually meals, right? So say you're meeting someone even for a coffee. If you're talking about work, like that's an expense. So I feel like, sometimes we make these meetings quick and let's grab a coffee and we go and you're just totally forgetting to make sure you make a note of that or whatever it is, because that adds up, even if it's, $4 or $5, if you do that, a good amount of times throughout the year, can be a pretty good expense. So if you're meeting someone for coffee, talking about business, definitely, or lunch or whatever, I'm just using that as an example, but anything like that. And obviously meals are subject to a 50% limit. So even if you have $500 worth of meals, you're only allowed to deduct 250. But I would say track some of that, if you're going out for these meetings and hey, it makes you look good. You're like, yeah, I'll take this, I'll pick up this lunch. And then you kind of know that it's, as a little bit of a deduction at the end of the year. Some other things I'm noticing people missing, believe it or not, is their cell phone. So I think because they think the cell phone is personal, it's deduct the cell phone. Everyone's on it. You're on it. You're making business calls from it. Who uses a landline anymore? I'm assuming anytime you're talking business or, doing something with business, part of it can be deductible. If you feel like, well, I don't know, I'm really not on my phone. Everyone's on their phone, whether you're Googling something, your email comes to your phone, some clients don't like to be too aggressive and maybe they want to say, do some sort of percentage split. To be honest with you, I just say take the whole phone because you're on it for business. You can back it up. You can substantiate it to the point, that's definitely that. So definitely the phone I've seen missed and home office expense. So if you're, I know a lot of you maybe are living in the area, living right in where you have your studio or gallery or whatever it is you're doing, even if it's just you're a writer, come up with a small little percentage. You can take, if you don't own the house, you can take a portion of your rent, you can take a portion of your utilities, your internet, all that kind of thing. So renter's insurance, you can take a whole portion of that. So I want to say those, let me see if I can think of some other ones, but yeah, I think those are probably my bigger ones. Any questions on things you think like, oh, I didn't want to take this, like any, thoughts of what you maybe thought you couldn't take that, I don't know.
Can I ask a big picture question?
Yes.
Can you talk a little bit about the difference between deducting expenses on your Schedule C and things that we talk about, like, oh, I donated $100 worth of, food appliances that I don't use anymore because I'm cleaning out to Savers. I'm going to deduct that. Can you talk about what the difference and the mechanisms of those two are?
Okay, so Schedule C is strictly for business expenses. So when you're donating, even if you give to a charity through your business, unfortunately, there's no line on that Schedule C to deduct charity. Charity falls under Schedule A, which is your itemized deductions, which, as you may have heard, under the 2008 tax reform, a lot of people don't fall into that category anymore. Doesn't mean that you're not getting a benefit. It's just that the standard deduction is now doubled. So for an individual, last year was like 12,400. So it's like you'd have to accumulate charity along with other things to get you over that threshold. So charity is not a business deduction. So it's not going to reduce the income that you then pay self-employment tax on. So even though if you're using a QuickBooks or any sort of income and expense tracking software, there'll be a line on your profit and loss and you can put charity in there, but it won't give you a true reflection as to your net income or loss because that's not deductible at the business level. And that's actually standard for whatever entity you are. So if you're a partnership, an S corporation, the charity on the forms that you get to then put on your individual return always gets put on a separate line. So it always falls under an itemized. So it's not a deduction for the business.
So the business deductions, the business expenses are just straight up reducing the income that you have to pay tax on, yes? Right. So it's in y'all's best interest to make sure all your business expenses are there because it just straight off decreases your tax liability.
Right. And you're self-employed, so because, what some people, I know some, entrepreneurs run into is maybe they have sometimes you can have, how do I explain it? So your Schedule C income, after you take your standard deduction and anything other credits you may have, gets you to a zero liability. And you're like, oh, great, I have a zero liability. Why do I still owe $5,000? Because it doesn't matter if you have a zero tax, you still have to pay into this as self-employed. You still have to pay your Social Security, Medicare portion of the tax. So that's always going to be there. So you know, think of it like, even if you think haven't made enough to even have any sort of taxable income, you're still going to pay into that schedule, that's self-employment tax. So that I see people get tripped up on that a little bit, not anticipating to owe.
You don't have to pay it if your profit was less than $400, but otherwise, yeah, you definitely do.
Mm-hmm.
One thing a lot of artists, not a lot, many artists occasionally run into is hobby loss issues with audit. If they're taking a loss for maybe more than 1 year,
Yeah.
2 years in a row and set, but then the third year they'll show a profit. Can you talk a little bit about what that is and how to protect yourself from that in audit?
Yeah, so basically what the IRS doesn't want you to do is, you start to knit little mittens for your friends and make, some money on it and then take all these losses. It's not sustainable. It's not a business, so if you're going to have multiple losses, which they expect, no one, it's great in the first few years if you turn profit, but more than likely you may not. So really it's just, is this your only stream of income? Is this the way, is this what you're living off of? If you can substantiate all that, if they happen to come and say, listen, you've had these couple of years of losses, you're like, well, this is my business. This is my livelihood. This is all I do. I don't have any other income on my return, then they'll definitely work with you on that too, but if you have $300 of gross income and you're taking, thousands of dollars of expenses every year, well, maybe you're not really a business anymore. So, so that's
what can artists do to sort of prove that it's a profession and not just me at home knitting for fun?
Well, I mean, you want to prove that it's what it's like what you're living off of, I mean, so if that's literally like you're trying to survive and that's your only means of income and you're trying to have this business, then that's what you're doing, so it's not working for someone else, working under the table somewhere, I mean, this is your only means of income. So, that would be something that I would say, like, they would, be able to come in and see that, and that you're actively trying to participate in that business, you're out there, you're hustling, you're trying to do all that. They'll take all that into consideration.
I wanted to chime in to say that I remember I went to a Taxes for Artists session with Hannah Cole, who shared that there was a court case that an artist won because they showed an intent to profit even though they were continually taking losses.
Yeah.
And some of the things she said to prevent to do that kind of like proving yourself is to like definitely kind of keep up the business end of things and like have a professional website and like contacts and I mean things that you would probably be doing anyway.
Right.
We're not hobbyists solely. I mean, yeah, in the legal definition.
Right. I mean, I think it's more meant to, alleviate some of the people that are just, like I said, like you're doing certain things, maybe you're just selling to family or, I mean, that kind of thing. And you're not really actively participating in that business to try to grow it. Exactly.
Yeah. So I could say, okay, well, I sold my friend this hat that I knit for $20. So now I'm in like, this is my business. And I could take so much of a loss on, how much yarn and knitting needles and stuff I buy and patterns. But $20 is not an intent to profit on a hat, because if you're knitting a hat, you're probably spending more than $20 in supplies.
Right.
So there's a differentiation there. I love the intent to profit phrase.
Yeah. Mm-hmm. And one other thing to get back to expenses, I was thinking as we were chatting is is health insurance. So you do hopefully all deduct there. It doesn't go on your Schedule C, but it goes on the first page or second page. They've changed the 1040 form so many times in the last couple of years. I think now it's the second page, but it is a adjustment to income, and there is a line that says self-employed health insurance. So do make sure that you're taking advantage of that. Unfortunately, again, it doesn't reduce what you would pay for self-employment tax because it doesn't come off of, it's not on your Schedule C, but that's what it will help, the overall tax liability.
I have a very, just curious, your thoughts, Erica, on with so many people working in a gig economy, do you personally have any speculations over what taxation things such as the self-employment tax or something else are subject to be changing in the next 10 years or so? Because I think that the current system is very still geared toward most people having a W-2. So I'm curious what your more informed predictions are on what might change in the future.
Well, for any, self-employed person, I don't think the self-employment tax is going to go away because that's what's funding the Social Security and Medicare, so unfortunately, that piece is going to, is not going to go away. I think they're pretty, there's a wide variety of expenses that you can take, to offset some of the income. I don't think that it's truly limited there. I think it would more come into any maybe credits that they start to offer, certain things for maybe people that need a little bit of extra help on the income tax. Is that what you were asking, or?
Yeah, I guess. I think, I was just wondering if you had any other thoughts, because it's quite a bit of work to do the Schedule C, which I'm just wondering if the IRS has trouble kind of keeping up with people who are doing it improperly because there's so many people doing gig work and maybe not exactly knowing what they're doing and stuff like that. And if there were any ideas about anything in the system changing, but
yeah, I don't necessarily think there's anything in the system changing. I mean, remember the IRS only tracks your 1099s, so they don't have any idea for expenses. So that's up to you to put on there, so that you can then make sure you have the right profit or loss if you want to take it. Otherwise, they will come up with your own tax return and mail you a bill if they feel like that you owe tax on that. A few pointers is to try to now audits when, Schedule Cs are highly audited. It's random. It's a data mining system. I mean, but there are certain things. Try not to have expenses end in 0 and 5, more likely than not, your whole Schedule C shouldn't say 500, 200, 300, 1,000. That's not even reality. So the system will start to pull some of those for audits, right? Because that's not, maybe your rent could end in a 0 because you could pay that once, fixed cost every month. But for the most part, try to make sure that, you throw a 1 on the end or something if you came up. So, and again, it's not perfect. I'm just saying those are just my suggestions. It could still happen, just because I know Schedule Cs can be highly audited, just because they don't really have anything else to look at. So, so Serena, you said self-employment tax. Yeah, so it is on your net profit from your Schedule C. That's what that self-employment tax, because the self-employment tax is it's not really an income tax because it's going to Social Security and it's a Social Security Medicare tax, which we all pay into even when we're on a W-2. It just affects you in a different way. So, and you do get to deduct 50% of the self-employment tax because as a sole owner, you're paying the employer and the employer portion, but they let you have a deduction for self-employment tax, 50% of it. So. Anyway.
So it's 5:30. We have, maybe 20 more minutes. I have some more canned questions to go. But if y'all have specific things you want to ask, now is the time. Okay. Can you talk about like everybody is really afraid of an audit and sort of has this image of like some human from the IRS flying to their home from DC and coming in and like digging through all their records and looking at their, tape line on the floor, which is excellent. Can you talk about the different kinds of audits that exist?
Yep. So there's a self audit that you can actually do, and you basically put all of, you get the form and you put all the information together and you submit it on your own. That also gives you opportunity to maybe correct errors on your own as well. So there is a self audit feature. Rhode Island has that as well. I've had clients do a self audit. But if you get pulled for an audit, a lot of times what happens is you'll get a form. And they'll just start to ask for documentation. So this where it could be, receipts of certain things. They're not going to go, they don't necessarily go line by line for everything, so they will just go make sure that you have, valid receipts to back up for your expenses. That in their system that you've recorded, they may ask for bank statements. So that's why it's crucial to have a separate bank account. So they're not fishing through your personal bank account. If they're looking for any sort of income that wasn't reported, they'll look for maybe some deposits that came in, cash, a lot of cash that comes in and out to make sure that it was reported correctly. But a lot of times, sometimes they'll just send notices and they'll say, we want backup for this, and and then it's not as it's not as scary as some people think it is. So the auditors do try to work with you too. So because keep in mind, again, it's a lot of it is just random, so they know it's random, so they'll try to work with you. But that's where you would probably, and hopefully that will never happen, but if it does, that's really, you probably want to contact a CPA. Because a lot of times what I have is the client doesn't get involved. So you'll send me what you received in the mail, the auditor, whomever is will come out to my office, and then I'll work with them directly. Because also you want to give them as little amount as possible. People get nervous, I think, and we have like diarrhea, then I'm like, okay, woo! It's like, you don't want to tell them just any more than they want to know. So, sometimes it's, easier to have a third party work with them because we're removed from the situation. So, and, you can have a sales tax audit at the state level too. So, a lot of those, they'll come in and they'll pull, invoices to make sure that you're charging sales tax and that you're paying sales tax. So they'll go both ways. So that's just something to note too.
How long does the IRS require that you keep receipts? How far back would they audit you?
3 years is a good window.
And then MJ asks, should every business, including sole proprietors filing with a social security number, do quarterly payments of income tax? That's a question.
Yeah. So, if you think you're going to come up with a net profit at the end of the year, then yes, I would absolutely say you want to pay quarterly. Do you have to pay quarterly? No. But if you don't pay quarterly, which they consider as a timely filing, they will assess from the date that you didn't pay, and they'll assess some interest and late payment penalties on that. So for example, even if you had your first quarter is always due April 15th, for whatever reason, you mailed it on May 5th, they will do and it might not amount to much, but they'll do a small little calculation saying, well, you should have paid that on April 15th, So I think it's absolutely, you want to do quarterly estimates. Again, unless you're one of those people that just doesn't want to or can't pay the tax, and that's, it's not like if you don't pay the quarterlies, they're going to come and arrest you. You're just going to end up paying a little bit more because now you're going to have interest and penalties on top of that. So if you can, I would say do that, especially from a cash budgeting and planning standpoint, because, who wants to write a huge check at the end of the year? Maybe it's a little bit less of a hit mentally if you write that check out quarterly, even though it may not amount to the same amount. So.
And Serena comments that you don't have to pay quarterly unless you're going to owe $1,000 in tax.
Right. Yeah. So there's a threshold there. And again, and also like we talked about that safe harbor piece, like that you don't have to pay. So, but again, the thing with the threshold is you don't really know until you put all the numbers together. So, so even if it's a small amount on a quarterly basis, because who knows, maybe at the end of the year, you thought you were going to owe less than 1,000, and now all of a sudden you had this like great job that came in December and they issue a 1099 on December 31st. Now you have to pick that income up. So.
If folks are looking to hire a CPA, what should they be looking for? Like, what questions would you ask? How would you go about finding the right fit for, folks who are sole proprietors in a sort of specific and weird industry?
Mm-hmm. I mean, a lot of CPAs in general, we see the whole gamut of different types of industries. I would say you're probably going to look more for the price point too. You don't want to go to like a KPMG that they'll charge you, $1,000 to do your tax return. Not saying they're not good. I'm just saying, you want to also go what you can afford. But then also think of, there's also, you get what you pay for sometimes too. So I think that as having a CPA that is affordable to you, is a great investment in your business, because not even just from an income tax standpoint, but maybe you want to apply. I mean, look at these grants coming out. Maybe you want to get loans. Maybe, you're starting to grow and that's what you need. And you'll need them there to help you, not only from the tax, but to make sure your financials are good, make sure that you have them together. Because I've seen people miss out on opportunities where they think, well, I know how well my business is doing. I have cash in the bank every single month, so I'm doing great. And then maybe someone comes in and says, well, show me a profit and loss statement, put this together. Maybe I want to invest in your business. And now you're looking at them like a deer in headlights, and it's not professional, so it's also good to invest in a good CPA to help work with you throughout the year. I know I work closely with a lot of my clients. Most of them are on QuickBooks Online. I have access to be able to go into their account, in real time, and we can pull information together quickly if we need to, as opposed to getting a box of receipts and trying to, pull numbers together. So not only from a tax standpoint, but even just from a regular financial standpoint, it's a good investment.
I think that's a good comment too about how much you're going to pay for a CPA is also dependent on how prepared you are. So you're going to pay way more if you just bring Erica a box of receipts at the end of the year than you are if you send her a really well-organized QuickBooks file, right? So that's an easy way to sort of cut down on that cost while ensuring that you have somebody who's an expert looking at those taxes.
Right. Mm-hmm. And then ask questions, I mean, there's people out there, it is a little scary, but you don't have to be a CPA to file tax returns. So there are people that maybe for whatever reason they get trained at some point and, they're not an actual CPA and they have had different training. And that's fine. There's nothing wrong with that. But, you're going to get a different level of service, just as you all know, you get what you pay for. So that's also questions too that you may want to make sure that you're asking somebody too. If you, feel like you're making this investment in your business and yourself, what type of person are you investing in as well? So, and again, nothing wrong with any of that. It's just things to think about. So.
Would you recommend, if you had to, and this is a huge broad question and feel free to just dodge it, For sole proprietors, would you recommend like a big accounting firm, a like small business like yourself, or something like H&R Block or Liberty? Like which of those would you send people to? That's a very leading question because I have an answer for that too. I have very strong feelings about this.
Yeah, okay. Like I said, you get what you pay for. So if you go to a large firm, you're going to pay more, not that. So I feel like I call it like I was trained or I was brought up in a large firm, right? I was brought up in one of the top firms that are in Rhode Island. So I have that background, but my prices aren't their prices, right? So you're going to get the same type of service. Not saying that that's everybody that has hung their shingle or started their own practice. The large firms are definitely great. They could potentially maybe offer you some additional things depending on, again, like the person that you get. Are they gonna, you know, I see a lot in my profession changing. We have a lot of people that are going to retire soon because that's just the way of this profession right now. So some of those people aren't keeping up with things. So maybe their fees are very low, but they're like over the accounting world for the last, 40 years or whatever it is. The middle firm, you're going to kind of, everything is good. The middle type of firm, the smaller, they're still great too. And then, the H&R Block and Liberty, again, it's once you start to get into Schedule Cs, they just have their little checklists that they're going through. I'm sure they have very highly intelligent people that work there, maybe just people that are trained to just work on that season, so you may have a little more risk there and not necessarily risk in the sense of like, you're going to pay, you're going to get audited or you're going to, just risk that they may miss something to your advantage, that could potentially, negatively affect you. And sometimes they can be just as expensive because I think some of them they charge per page. So it's crazy, and now with these tax forms changing, it's like you pay $600 and you're like, for what? I have a Schedule C, but because that has a Schedule C and it has the normal tax return, it has a Rhode Island tax return, it has a Schedule SE for, so it's almost like if you're going to pay that, you may as well work with a professional who you can then also call throughout the year. So I think that's, that relationship, I feel like with a good majority of my clients, I'm talking to them on a monthly basis, even if it's just like, hey, like, how's it going for a friend level, you don't get that experience obviously with those sort of cookie cutter type places. That's my opinion, but I don't know, Molly, what you think.
Oh, yeah. I'll say that when I worked at an accounting firm, every single time we got a new client that came from H&R Block or Liberty, and I'm not exaggerating when I say every single time, the CPAs would file an amended tax return for that year before. Yeah. So they got something wrong. And a lot of times the new clients would come in and they would leave their bill from H&R Block in with their taxes. And so we could see what it was. So they were also charging more than the sort of like mom and pop shop that's going to get to know the client, that's going to support you all year long, and that's going to represent you in audit and like is going to do much better work than a place where they do 2 weeks of training and then you work there for 2 months. And it usually costs less. So yeah, my feelings about finding a CPA are similar to my feelings about pretty much everything, which is this local small business is going to be the right fit for other local small businesses.
Right.
Which are y'all.
Exactly. And I can tell you from my experience, I left my firm after 16 years, not because they were bad, they're a great firm. I just felt that my profession was changing and I felt like there were more people like you coming through the pipeline. There's more mergers, there's retirements, and a lot of the smaller client were getting dumped into these bigger firms, not, just because that's just what was happening, and that's fine and how they retire. But now your return went from whatever, $300 to $1,000. You can't, that's not sustainable. So, that was one of the reasons why I went off on my own to start to have a firm to grow, to cater to some of the small business people that want to have that nice one-on-one and get that type of advice and not, go bankrupt with doing so. But again, they're all, the big firms are great too. It's just different structure. So.
All right, y'all, I'm out of the big leading questions that I have. Do y'all have more tax questions? You have about 10 minutes. And if you don't, I'll move on to my closing slides.
Kind of following up on the finding a CPA who's a good fit, is there some sort of like professional directory or searchable way to sort of like maybe through Riska or maybe just through CPA world to explore people, options, firms?
So I am also on the board of the Rhode Island Society of CPAs, and I know, if you go to our website, I believe that, there could be a directory there that of, CPAs that we have, but honestly, like word of mouth, like just ask around, because I feel like then people will give you their opinion, as to whom they worked for. I get a lot of stuff through Facebook. I used to belong to the Lady Project, which maybe some of you have heard of. So
I've heard of it.
Right.
That's how I found Erica.
Yeah. So, a lot of people will post on their website looking for CPAs, and then it's always good, because then there's always options, it's not just one thing. So I would say maybe start with that.
Great.
Yeah, Riska, that's one of the projects that I've wanted to do since I started, is develop sort of like list of folks that speak art that are, IP lawyers, other lawyers, accountants, lenders, stuff like that. But that's something that I have not had time to do yet. But word of mouth is good. I know Shay Rivera has some good accountant recommendations for me in the past. Randy has one guy that he goes to every time, but I think he's going to retire sometime soon. I think his name is David. So we're through things like this, we're actively working on expanding, particularly because, for those of you dealing with sales tax, if you need sales tax help, you want somebody local.
Mm-hmm. Yeah. And always feel free to reach out to me. Like, I'm available and I'm taking clients too. So.
Yeah. And I'll put tomorrow.
Should I put my info, or did you send it in an email?
I haven't sent it in an email, but I'll put a link to Erica's website and her email on the Business Basics webpage, where I put the resources list usually beneath the recording.
Great.
Sort of jumping off MJ's question, I was wondering if there's any place where like some of the tax and sales tax info for Rhode Island is in plain English, because I've like in my internet research journeys, which have been long and many, I've read like all these articles, and there's like news articles, and then there's like the tax code, which is completely unreadable for at least me. I'm wondering if there's like any place where there's like, the instructions and like, for example, the information that Randy presented, like that the tax exemption form is for the whole year and you do this and you do that. Is that like listed anywhere?
So Molly, I don't know what your thoughts are, but anytime I've seen Liz Tanner talk, she always says that Commerce RI has nice packages and everything, but I never can seem to find anything. When I actually looked a little before I did this presentation to think maybe I could, but
yeah, I haven't ever seen anything like that. I would send folks with like specific questions to SCORE to find a mentor, or to ask an accountant on a, because you don't have to hire an accountant to do your taxes. You can also set up, an hour advice session or something like that. Sometimes you can, not all folks offer things like that, but many do. And that's something you can ask when you're finding a person. But yeah, there's nowhere that I have ever found like super good plain English stuff. I'm writing down that I should get Randy to do a like very basic how-to for the art sales tax exemption form, because that's something we get asked a lot and we should have more
Yeah.
resources on it.
Yeah, that would be probably good, especially as I'm sure there's going to be more and more of that.
Okay, final thoughts. All right, I'm gonna do my normal thing. Let me get into present mode. Okay, week 5, here we are. Okay, stuff that's upcoming that RISCA is providing programming. On Thursday in 2 days, we're bringing back the artist peer support calls. They'll be every other week. On Thursday, we're gonna talk about documenting the pandemic, like why that's important, how artists are doing that. And Nafis White will be facilitating. Then I have my office hour on Thursday. Also, y'all have the link for that. Friday from noon to 1, my colleague Todd will be doing the organization's peer support call about virtual galas, if that is interesting to you. And then something that if you joined at the very beginning, you might have heard Erica and I talking about, Commerce Rhode Island has announced another grant, the HART grant, Hospitality, Art, and Tourism. I do not believe any of y'all qualify, though sole proprietors are on there, but you have to be showing a pretty large revenue loss and have a like minimum budget of $150,000. But if any of you are part of nonprofit organizations, sometime this week we'll have a webinar with Commerce about the HART grant. We don't know when yet. And then just a reminder about the Restore RI and business adaptation grants to get those in. Okay, non-RISCA things. Friday morning at 8:30 a.m. I try and sit in on these. I'm not going to sit in on that one. That's before my awake time. SBA Rhode Island is having a webinar on business legal structures and their tax implications. If any of y'all got PPP loans and are thinking about the forgiveness stuff, filling out those forms, they're having, SBA Rhode Island again is having a webinar up specifically about SBA or PPP loan forgiveness Friday at 10 a.m. And then on Monday, the wonderful, amazing Rhode Island performing artists, Rose Weaver and Sokio Ross, are doing something with the Kennedy Center, celebrating arts across America. So they'll both be performing for 30 minutes each, and that will be phenomenal. Okay, grants and funding stuff that's coming up. For any choreographers, the Regional Dance Development Initiative, which comes with some money and professional development through NEFA, that application is due November 10th. Restore RI is ongoing and does not yet have a hard deadline. There's still plenty of money left in there. Business adaptation grant that I thought would be tapped out by now because it had a pretty small maximum, like pretty small total pot, is not tapped yet. And they have set a hard deadline of November 9th at 4 p.m. The HART grant is, I wrote this yesterday, and the HART grant was supposed to be due November 9th, but now that they've actually announced it, which they sent it out at about 3 p.m. today, it's not due November 9th, but it doesn't matter. And if any of y'all are in Providence, I hope that you checked out the micro enterprise grants from City of Providence and LISC, because you should get those applications in ASAP because there are only 23 of them and they're about $10,000, and they're for folks making, I think, less than the median income. So they're also, you know, for artists. And that is all of the things. I did not do a good job of dropping all of those items in the chat, but I can do that really quick. Okay.
If anyone's interested, tomorrow night, as part of trying to take care of each other in a stressful week, I am leading a postcard making class that will just be like, come hang out, draw a collage, and make a postcard for someone far away or close by. I'll put my Instagram in the chat, and that has the info, but it's through Thunder Mist.
Any final thoughts?
Thank you.
Yeah, thank you guys for having me. This is great conversation. And like, you know, once Molly posts my info, please don't hesitate. Feel free to reach out with questions or anything like that. So
Awesome. Thanks so much, Erica. This was so useful.
Yeah,
Good.
thank you, Erica and Molly.
Yeah.
I'm so glad I got a professional. When y'all started asking me questions about sales tax, I was like, it's different from state to state.
Yeah.
That's what I know. And then for Providence folks, here's the link to the micro enterprise grants for small businesses, micro businesses. Okay, y'all, as usual, this will be up on the website sometime tomorrow. And I hope you all voted, and if not, go vote now before the polls close. Yes. And I'll see y'all next week, or maybe at some event between now and then.
Great. Bye.